In exercise 217, we carry forward our same scenario with help today. And instead of preparing our income statement, we're going to prepare our second statement, which is going to be our statement of retained earnings. I look at the statement of retained earnings as if it's a pie. The total pie is going to include earnings since when the company started. And when I mean earnings, I don't mean just revenues. I mean earnings in terms of revenues minus all the costs or expenses of the business since the beginning of time. Then what we're going to do is remove sections or pieces of the pie by distributing profits to owners, and we call those distributions of profits to owners, we call those dividends. So you see the small section or chunk of the pie taken away. And what we're left with, the larger section here, is what we call retained earnings, or it's how much earnings we retain in our business for future growth and to invest back in assets and other items. In essence, the statement of retained earnings is going to look at our total earnings and see how much is either retained and how much is distributed to stockholders in the form of dividends. Now let's go ahead and jump into actually preparing this statement. Very similar to our income statement, we want to first list our company name, which is still going to be Help Company. We want to list that this is a statement of retained earnings, so list the title of the statement. The next important item is to indicate the time. And it's important to determine whether certain statements measure a period of time, some indicate at a point in time. Very similar to our income statement, our statement of retained earnings is also going to look at a period of time. The particular period of time is going to be for the month ended August 31st. Remember, we began operations on August 1st, and then we're preparing our financial statements as is the end of August, so that's going to give us the month ended August 31st. The income statement looked at revenues and expenses from the beginning to the end of August. Statement of retained earnings is going to explain the change in retained earnings from the beginning of August to the end of August. Now, let's start out. The first item is we want to list the balance of retained earnings at the beginning of this period of time. Again, for us, it's going to be the month of August, so that's going to be August 1st. Our statement of retained earnings for the first period is going to be very unique. We just began operations on August 1st. You don't have any retained earnings in the business as of day one, so it's going to be very unique. Usually, you're not going to be recording a statement of retained earnings for a business in its first period. So typically you're going to have an existing balance that's going to be the end of the year retained earnings for the prior period. But again, we're looking at day one of business, so it's going to be 0. The next thing we need to factor in is how much earnings we've added in for this particular period, or maybe even taken away if we had a net loss. The good news is we've already summarized that on our income statement. So we need to just take that bottom line net income or net loss number from our income statement and carry that forward. We can look back and summarize what we've already done in our income statement. We took total revenues of $32,000, our consulting fees earned, and subtracted any expenses or cost of earning those revenues in order to figure out our overall net income or net loss. That included rent expense of $3,000, salaries expense of $9,000, telephone expense of $500, and miscellaneous expense of $1,800. $32,000 minus each of these individual expenses was $17,700. That's our overall profit that we have. The amount our revenue exceeded the cost or expenses of earning those particular revenues. Now, had expenses exceeded revenues, it would have been a net loss. And instead of adding to the retained earnings in the business, it would have taken away earnings. So it would have been a subtraction. I will note sometimes you will see statement or retained earnings where you'll see a summary figure here that you'll see beginning of the period retained earnings, and you'll either add net income, in this instance 0 plus 17,000 would be 17,700, or subtract net loss. So make sure when you're preparing your statement or retained earnings you pay attention to whether there is that intermediate subtotal there. We're going to go ahead and then look at dividends. Remember, earnings since the beginning of time minus any distributions to our stockholders. So we need to look at any current period distributions to our stockholders, and we're going to find that in their dividends account, and that's going to be $15,000. That takes away from the earnings we maintain in the business, which is why we show a less or a subtraction. So then we have our ending period retained earnings as of the end of August 31st. We take beginning, 0, add in our net income of $17,700, still brings us up to $17,700, and then subtract out any distributions, $15,000, and that gets us our ending retained earnings, how much we maintain in the business, of $2,700. We need to keep that figure in mind because we're going to carry forward that balance to our balance sheet, and we're going to prepare our balance sheet next.